Hi, good afternoon. Let's talk today about how the markets are behaving today. We have a movement in the prices, in the indices that is quite important, a little bit different than what I expected yesterday. And about 1 hour ago, the market started to behave differently than yesterday. So let's talk a little bit about how the market has been behaving and what type of things we can expect from the use of technical analysis to evaluate the market conditions, the current market conditions. So yesterday I mentioned that this level was a very important support level, and since the market, that support was holding and the market was trading above that level, my expectation would be for some days of sideways action and not much downwards movement. That happened until about 1 hour ago, when the market lost and did yesterday's low and started trading below yesterday's low. So right now I still want to see some strength coming back into the market. Hopefully that support level will hold until the end of the day. If that does not happen, then most likely we are going to trade lower until we find that support, which will also coincide with the 50-day moving average, which is also a very good support for the market. The 144-day moving average. We are already trading below the 50-day moving average, which for the short term it's not a very good indication. And also the 20-day moving average also turned down, indicating that we might be losing that upwards strength. However, if you notice what happened here last year around July, August until the beginning of September, we saw the market correcting, trading lower, and it was quite it was over 10% correction. It was a very long or very deep correction, and at that time the 20-day moving average also turned down and the 50-day moving average turned down. The main difference is that at that time we were trading below the 200 period moving average, so the market was not yet displaying all the strength that prevailed for most of for most of the second half of 2010, and now the market is starting to lose its luster again, and we might be heading towards the 200 period moving average and test it from above. So all that behavior, it's pretty much part of a healthy market. We expect that the market moves and then it started correcting for a while to absorb all that upwards movement, and it needs to find support at some key points. So yesterday I was pointing up to a key point in the market, which was a former top. Now the market is heading towards a very important support region, which is also another top, but it is a top that it's more how can I say, more relevant to the market geometry. So let's keep watching and hopefully the market is going to find support there. If that happens, we will have very good entries in many stocks and ETFs. So it's not a big concern to see the market trading down now. It is a big concern if we are in the wrong side of the market at that point. And the wrong side, it is being long. If you are cash, you are not in the wrong side of the market yet, because there is no really good indication that this downwards movement will prevail for a long time. It's not yet a market that we need to go short. It's a market that it's better to go fishing than trading, but it's not a market to go short yet, in my opinion, in my analysis. So let's go back to the chart, and now let's talk about the Dow Jones Industrials. The S&P 500, it's a broader index than the Dow Jones Industrials average, which is just an average of the 30 large companies in US. So the Dow Jones also is in sync with the S&P 500, and it's trading below yesterday's low and heading towards that support level here. The Dow Jones had a weaker support than the S&P 500 yesterday, but now it's trading towards a stronger support. Hopefully that support is going to hold, and we might have some bounce from that level. The Nasdaq, which had been leading the market during last year, at least until February, it's now leading the market again, but leading in the downwards movement. And the Nasdaq behaves a little bit different than the Dow Jones and the S&P 500. It has a very nice trading channel, and now we are heading towards that region here. And that's where I expect the Nasdaq to find some support. If we lose that line here and trade below for a while, we will be heading towards that support region here. So in a nutshell, my expectation for the Nasdaq for the next few days is to trade lower, and hopefully it's going to find support around that line here, that uptrend line. Yesterday I was talking about the oil also, as represented by the United States Oil Funds, and I mentioned that oil found a support region yesterday, and yeah, it looks like that support is going to hold with trading sideways, at least today. We need to trade sideways for a while, and then the market might be able to go up for a few days. We still are experiencing some accommodation in the oil. All that strong movement up in the oil carried a lot of emotion because of the Middle East unrest. And even though in terms of seasonals we are in a bull season for the oil, that all that initial movement which carried a lot of emotion, it still needs to be absorbed by the market. So that deep correction, which is not what the season, what I would expect looking at the seasonals, happened, and we are now trading at a support level. So My expectation is that we are going to find support here and then start to trade higher as expected by the seasonal. Looking at the Canadian index, the Canadian index had a very interesting day yesterday. It opened sharply lower like the Nasdaq, but closed above that support level. Now we are trading sideways, and that's very much connected to the expectation of the markets. The market trades on expectation. That's what makes the prices move. And there is an expectation in the market that Canadian companies will be able to supply goods for the Japanese reconstruction. And so speculators are trading and buying those companies. One thing that hurt the Canadian index a lot in the last few days was the uranium companies like Cameco, Uranium One. Those companies traded sharply lower because of the nuclear concerns coming from the accident with the nuclear generation plants in Japan, caused by not by the earthquake but by the tsunami that put the power that supports the cooling down, and it's probably going to carry those reactors to a situation that might be some sort of meltdown or really serious damage in the reactor. Hopefully there will be no major radiation leaks, but the situation is not good anyway. That pushed those uranium companies down, and also General Electric shares went down sharply because of the accidents. Yeah, but if we look to those companies like Cameco, let's put the chart here, we can see that the prices opened sharply lower. It was the opening at 31.70 after the accident on Monday was almost 20%, almost 20% lower than the close on Friday last week. But Cameco managed to trade higher. Yesterday was also a very emotional day. Cameco opened also sharply lower again, traded higher along the day. Today it's making the contrary movement, and that it's going to go on and on until the market absorbs that change and the company becomes or go back to its normal evaluation. Let me extend that line here. That line, which is a very long upwards trend line that connects those lows, it's a very important support. So I do not expect Cameco to be trading below that line here. My expectation is that Cameco will hold in that region. The motion will fade away, and investors will start to behave with more reasoning, with better reasoning, and Cameco will go back to its normal valuation situation. However, just a very important remark here, and that's very important because it's proof, basically a proof that buy and holds do not work anymore. We need to be on top of what our holdings are doing, and Cameco lost that upwards trend line last February 22nd. It closed below that level, and then moved sideways in the 50-day moving average region and was never able to go back to above that upward trend line. At that point, no trader or investor should be long. It can be cash out of the stock. It doesn't matter. It doesn't need to be short the stock. But there was no reason after that behavior here. There was no reason to stay in that stock. Even for long-term investors on Cameco, it's at least if no, I want to invest in that company, I want to be a partner in that company, you need to hedge your position. Otherwise, you are bound to suffer huge unexpected losses. Even though no one could predict what happened in Japan at that point, the market was showing us that there was no strong reason to be long on that stock. So there was no reason, and since I don't believe in buy and hold, there was no reason to be holding those shares anymore. And the only situation I can imagine is that you want to be a partner in the company, but then you need to hedge your position to avoid huge losses. And that's what caused all that drop here, all the motion that carried the accident in Japan, and also the motion of those people holding the stock. And now we need a period of accommodation, and people that has a more stable mindset, let's say, will be able to see the opportunity and trade Cameco back again. So those were the remarks I had to make about the market today. I would like to thank you all for watching, and if you like, you could visit us at our website, www.wtaacademy.com, and take a look on the course and workshops and webinars that we present, showing how to use technical analysis to create strategies that one can trade and invest to be profitable in the market in the long term. It's not a get-rich scheme. We need to have very good planning. It is a business, and we need planning, we need actions, we need to be on top of what happens. Otherwise, we won't be able to make money. We don't need to expend long days watching the market. If you have a day job, you can still benefit from that knowledge and good planning. However, without good planning and good knowledge, a solid knowledge, no one can make money in the market. Thank you very much for watching, and do not forget that education or knowledge, it's the best investment you can make for yourself. Thank you.